Let's go ahead and put on a earnings trade for Amazon. Amazon, IV rank of 66, IVX of 37. I have no real directional assumption. Amazon's trading at near its all-time highs. I really don't have very much of an opinion. I certainly could do something like an iron condor like I did with ARM. So if I sell this put credit spread, receive 65 cents on that side, that's okay. I like collecting somewhere between 60 and 70 cents. See, we collect about the same on the call side or maybe a little more. Yeah, I'll lean a little bearish. Receive around a 146 credit. Risk 354 to make 146. Let's see if I get filled on that. And 146 is the mid price. Well, now it's 147 is the mid price. Yeah, I might get filled on that. We'll let that work. To me, that makes sense. We're just playing for volatility, and we're playing for Amazon not to make a huge move. As long as it doesn't make a $20 move in either direction, I should be fine. Which I don't expect Amazon to make that kind of move, but who knows. What were my short strikes? The 210 put and the 265 call. So, I mean, the 210 put is all the way down here. I mean, is Amazon going to gap down that far? I can't imagine it would. The call side, especially since Amazon's been so strong recently, it actually scares me a little more, but the 265 call is way up here. Is it going to gap up that high on the call side? Again, I wouldn't expect so. But just because I don't expect it doesn't mean it won't happen. Because the market is pricing this thing like, well, I'm in the 43-day cycle where I put those strikes on. But if I go to the 1-day cycle, what does the market think the likelihood of this thing dropping to 210 is? Well, I go to that put there in the 1-day cycle. That is 6 deltas. Market thinks there's about a 6% chance Amazon could trade down to 210 in the next day. Now on the call side, my strike was the 265 call, 9 deltas. So they think there's about a 9% chance this thing could explode higher above 265 in the next day. So even though, I'm thinking, well, there's no way I'm going to get hurt on that, and the market does price it to, there's a few percentage points, right? There's nothing ever in trading or in life that's ever a 0% chance. Never, ever assign a 0% chance to anything. No matter how ridiculous you think, the odds are, I try to always assign, at least a 5 to 10% chance of everything, not just in trading, but in life. I'll always give like the most impossible scenario, at least a 5 to 10% chance of happening. That way, when it does, you're never completely blindsided by it. Because when you start thinking things just can't ever happen, that's usually when they do. And that's when, you get hurt really badly. Intel still has high IV even after earnings. Yeah, I mean, I've enjoyed playing Intel lately. I keep selling strangles on it, and they keep working. In the last month, I've sold 2, made 80 bucks on that, 90 bucks on that. I go back 60 days, no, about 180 days. What was this? That was our earnings trade that didn't go well. That was not a strangle, though. That was long options. I was probably hedging some other positions with that. But strangles, yeah, they've been working on this. What was the last expiration I did? I did the February cycle. I did the 17. No, that's wrong. Did the March cycle, the 16 and 26. So since I've already done the March cycle, let's go to April. Let's go 14 delta put, 14 delta call. That's a 16.26. 63 cents credit, buying power of 218. Let's sell 3 of them. That gets me $189 on a buying power reduction of 654. Let's see if they'll give me a cent on those. Make that max profit 192. Yeah, they're not going to give me that dollar. I didn't expect they would, but just in case they would, I was going to try to get an extra buck from them. I'm going to let that work. That's not a terribly big trade either, because Intel's not a terribly high price stock, but that was actually a very juicy credit. That was nearly $2 credit on a trade that didn't take $700 worth of buying power. And this is one of the things I often talk about sometimes with these crazy trades where people will go and sell an option for $1 or $1.50, for 150 bucks for a buying power reduction of 2,500, 3,000, 4,000. Like you're using so much buying power, to make that money, where there are trades like Intel that don't require a ton of capital. Roku, this one here that I've been trading, I don't think this one requires a ton of buying power. Yeah, $800 buying power reduction. You can find things at a discount. The Strangle and GitLab, I bet $600, $700. You can find some really good discounts as far as things that you get a ton of credit. And all those trades I received, I probably at least $2 credit on those, on a buying power reduction and nothing. So that's, sometimes you got to shop around a little bit. You'll find some good deals. Now, let's take a look at my earnings trade. My 1-day earnings trade, this Iron Condor, which is a 42 DTE trade, but I played it specifically for earnings. This was a home run because it didn't move. I mean, it made a $4 move. That's a nothing move. And volatility's coming in. Let's see if they'll give me, well, mid price is $73. Let's see if they'll give me that. Probably not. That's probably optimistic. We got to let the bid-ask spreads on some of this tighten up. See if that's actually a reasonable price. I'm going to tick it down to $72, give up $1. If we get filled, no. Amazon is selling off a little bit now. Well, it's in the general neighborhood. I don't want to take too low of a price because this was a pretty good trade. I feel like I should make at least $70 on it. I'm going to put in a closing order for 70 bucks and we'll just let that work. I'm pretty certain that that's going to get triggered. By the way, that $70 closing order would be 50% max profit, just under, because I sold that Iron Condor for $145. So great trade, right? 1-day trade. The other trade I wanted to take a look at today was this FCX trade, these puts. Now, I would assume this thing would have a huge P&L on the day as far as being up. Only up $2. That doesn't make much sense, but I'm assuming, again, it's kind of early. The bid-ask spread's about 7 cents wide. Yeah, let's let some of this percolate a little bit and see where that's at here later in the morning. Anything else that I need to address? Not really. Let's just go through them real quick. AMD, short put. AMD's down slightly, but this position, just put it on. Hasn't done anything yet. New position. I've already played AMD a couple of different times, I think, this month, and won. Yeah, sold a put, won, sold a put, won. That's the new one I just put on. AMD has been great. So let that work. Amazon, the Iron Condor will probably get filled in just a second. AVGO, we're now under $100 on that loss, right? So this has been great. This trade has come back to us. Delta. This Strangle is a new Strangle. We just put it on 3 days ago because we had a Strangle on. You guys remember I had the Strangle on earlier. I was in it for probably 2 weeks, maybe 3 weeks, and we made a nice little profit on that. So I went ahead and put on the next trade. Went out to the next month, sold 2 contracts of essentially the same, one standard deviation kind of Strangle. Been in it 3 days, and it's working a little bit for us as well. Yeah, FCX, the pricing you see now, I'm up $24 on the day. They up about 60 bucks since open. I've only been in the trade 3 days. Already made 40% max profit. That's nice. Gonna let that keep working because I still think that pricing is probably a little on the low side, but we're getting pretty close to 50% max profit. Let me actually put in a closing order for 50% max profit. Maybe I'll give up a couple of bucks here just to see if I get filled. I'm going to put in a closing order for $72 profit, so another 8 bucks, and hopefully that'll get triggered. GitLab, the Strangle, doing just fine. iBit, my Strangles, actually, even though iBit is up $1.50, you would think would hurt these Strangles, because these both are delta neutral Strangles. but they're doing fine. I'm actually up $6 on this strangle, and this one unchanged on the day. So I like it. And I just got filled in FCX. So, wow, I got that $8 that I wanted. So yeah, $72 profit on that in 3 days. Amazon, I'm still waiting on my $70 on that Iron Condor. Still, the mid price is hovering around $70. I suspect that that will get triggered here in just a couple of minutes. Intel, this strangle is up $9 on the day. Intel's not really doing much, down 16 cents, but that's okay. That's not a very big move. Plus, I get theta. Plus, I get a little vega because I suspect volatility contracting pretty much across the market today. Tesla, well, I say good IV. Good IV rank, it's 27. That's under 30, but just under 30. Like, I wouldn't mind doing something in here since the IV is a little low. Strangles and Iron Condors, probably something I would rule out. So I'd do something directional. Credit spreads. Let's go to the 42-day cycle. Has IVX at 55%. That's good IV. And if I sold the 25 delta put and then bought the put $5 below, yeah, I mean, that's like a 140 credit. Risk 360 to make 140. And that's going all the way out to the 25 delta for the short put. You rarely get that kind of credit for being so far out of the money. You know, and that's a small little trade, $5 wide. That's as small as you could make it. But those of you that would want to make this trade bigger, you could certainly make it $10 wide, 15, 20, you know. However, you know, and of course, the wider you make it, the more this put really starts acting like a naked short put. You know, because if you go way out here, you know, this is not protecting you all that much. At that point, you may just consider just going with a naked option. But let's do something like a $10 wide put credit spread, where I risk 740 to make 260. I risk about 3 to make 1 on the trade. Probability of profit, 70%. Probability of making 50% profit on the trade, 80%. I like it. Let's see if they'll give me 254 credit. I'm going to place that trade, see if it gets filled. If not, I may come back and play with the pricing or adjust the strikes. But I like it. Still has, it doesn't have, you know, fantastic IV, but it still has really good IV, especially on a directional trade, because we're not just relying on the IV if we're being directional, right? We still would benefit from an IV contraction, but also because we have some directionality to a put credit spread. If we get the direction right, we also profit. Or something like an Iron Condor, you know, you don't profit from directionality, you really profit from that fall contraction. So, you know, I probably wouldn't want to do that on something that only has an IV rank of 26. If it had an IV rank of, you know, 40 or 50 or 60, then the Iron Condor makes a little more sense.